QuickBooks Online 2025. New customer setup and accounts receivable beginning balances. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 project file we set up in a prior presentation, continuing to lay down the foundation similar to the infrastructure we put in place before we start building a city on top of it. The building blocks in our accounting system, of course, being the double entry accounting system itself, entering transactions done with forms found under the plus or new button, broken out by cycle, the foundation or infrastructure item often found under the cog, under lists, the two main lists being the chart of accounts as well as the products and services. We're going to be thinking about those in our mind as we set up our beginning balances, which we have imagined are these items we're pulling in from a prior accounting system as of the end of 12/31, we're thinking 24, so that we can then start our new data input on top of these numbers as of January 1st, 2025. So we looked at last time the inventory items, and we spent a lot of time on the inventory because it's one of the more confusing items here. So now we're going to go to, let's see if I want a different color. I want the green for done. It's been done. Boom. So now we're going to the accounts receivable. So we're going to go to the accounts receivable next because it's basically the next most complicated item within our beginning balance structure, remembering that if you don't have any accounts receivable, meaning you don't sell to customers on account, meaning there's no timing difference between when you make the sale and when you generate the revenue, it'll be easier. You won't have any accounts receivable. When do you have accounts receivable? That's when you issue an invoice. What type of industries? Typically like an accounting firm, a CPA firm, a law firm, landscapers, any business in which you have to do the work first and then bill the client for the work that has been done. Oftentimes it might be some kind of like service job cost situation because you don't know how much to bill them until you actually run the clock or do the work, count the activities that have been done. So that means that if this is the number in our prior accounting system that I want to put into my current accounting system, I can't just do it with a journal entry debiting $20,500 and crediting, say, equity, because that wouldn't give me the subledger accounts. What are the subledger accounts? That means that instead of breaking out the account just by the date of the data input, which would be like a general ledger or transaction detail report, we also need it broken out by who we owe the money to, and that, of course, would be the customers, the subledger breaking out by customer. Now, QuickBooks, if we're going to use an accounts receivable account, will force us to add a customer, which has its pros and cons, but you can see why they do it. It makes sense because that will force us so that we can almost never have the accounts receivable subledger account not tie out or match the general ledger account. So what does that mean logistically when we enter this into the system? Instead of entering the entire balances one at a time, instead of entering them all at one time, we're going to enter each balance one at a time, the other side going to equity in some way, shape, or form. And if all of the balances are correct, due to the double entry accounting system, the total equity section will then be correct, and then we'll fix the equity section. How are we going to do that logistically with the accounts receivable? That means with accounts receivable, I want to enter each of the customers and give the beginning balance for each of those customers that owe us the money. The invoice or the form that QuickBooks will most likely generate when we do that will be an invoice. An invoice typically increases accounts receivable, and the other side goes to not the balance sheet account of equity, but the income statement account of income. So it's quite likely they don't put the other side into opening balance equity, but into income. But that's okay because we're going to enter it as of 12/31/2024, and the income statement will close out or roll into the retained earnings. So it'll end up in the equity section no matter what. Let's see what that looks like. All right, so if we go back into the QuickBooks, what we want then is if I go into the sales area, we want to look at and go into the customer section, closing the hamburger. I added this one customer just to check the sales tax, but now we're going to add the customers. Now note, one of the advantages of saying, if I had a prior accounting system and I'm moving into the current accounting system, is that you can possibly purge a lot of the old customers, for example, that maybe you don't do business with. We don't want to pull in a customer list that has thousands of customers, but we only actually do business with 10 of them. That would be a waste of space. It's going to confuse things unnecessarily. So one of the benefits when you're going from one accounting system to another is to say, do I want to pull in all the other transactions from the prior accounting system, somehow like roll in all the other data in the prior accounting system? Or do I want to start at the current point, which is what we're doing here? And that allows you to then eliminate a lot of the excess stuff that has accumulated, which possibly are not useful anymore. That's the decision you need to make here in terms of, if I export my customer list from my prior accounting system, I possibly want to go through it and eliminate anything that I don't want within it before I import it into the new accounting system, making the data input in the new system much easier. Now, the ones that you need to have for sure are any customers that have balances in them. And that's the only thing that we're going to add. So this is going to be our customer list over here. We're just going to imagine these 3 customers just for an example of the data input. But of course, you might have more than 3 customers. And you might have a long list of customers, right? But the idea here is that we just want the customers that have a balance in them, because that's going to be necessary to make the subledger. That's the minimum amount that is necessary. You might want to add other customers too, even though they don't have a balance in them, just so that you could put them into our system. All right, so that means we've got the name, we've got the first name, last name, company name, the phone number, billing address, email, the customer balance. I'm going to change the date to 12/31/2024, which is the end of the prior accounting period. And that's going to be the date that we want to import it as of. I'm going to save that. Let's go ahead and save that. Now, there's a couple issues with your customers that are common to come up as we enter this information into our new system. And that is that sometimes the customer name is going to be combined together, first name and last name. Sometimes the data that you'll get will break out first name and last name this way. Sometimes it'll have the last name first, comma, first name, and whatnot. You have these formatting issues that are going to become a problem. So there's a bunch of like Excel tricks that you can use to combine things together. So I don't want to go into them in too much detail here, but just note that if you search for, like if you have 2 separate columns and you want to combine them together, you might look for certain little tricks to do that. One trick, for example, if I had these 2 like this, and I wanted to put them together with a space in between them, I could do that with a formula, which would look something like this. This equals this, and then you have to tie it together with an and if you want the text instead of a plus, because it's not numbers, we want the text. But that's going to be stuck together. So now I want a space in the middle of it. So if I go back into it, I can say I want to have and then I'm going to put quotes, because that's what you do when you want a text in there, and then a space, and then in quotes, and hold on, and then another and, right? Let's do another and. I think that'll work. So now we have a space in there, and then we can copy that down. And then now this has a formula. When I save this as a CSV file, it will most likely just strip that formula out and just give me the text. But if you want to remove the formula just to make sure it's not there at all, I can copy it and then paste it 1, 2, 3, just to have the text only. So that's one idea. Now, if you wanted to make it, what if you wanted to make a last name, comma, first name? You could do a similar kind of thing here. You could say, well, I want this one, and then I want a text. So I'm going to say, and then I want a comma and a space, quotes, and then another and then I want this one. So wait a sec, I want comma, space, and Here I have it. I don't know what I was doing there. So I want this one, and then I have to put an and, so I can add the text field, which is going to be under the quotes, quote, comma, and a space, and then end quote, another and to tie it to this one here. And so now we've got the last name and first name. So we have that. Now the other thing that might come up is that you have it broken out this way, and you want to break them out. You want it's combined together, and you want to put them into their individual cells. So for example, like the billing address here, I have broken, it's in one cell, and maybe I want to break out the commas into their own column because I have different cells for the data input. How would I do that? Well, I'd have to go, okay, let's copy this. One way we could do that is I could say, all right, let's paste it over here and say they're all in one cell. And so I can go to the data tab up top and select the data. And then I want to go from text to columns, selecting text to columns. And then we have our two options, characters such as commas or tabs separated each field. And then fields are aligned in columns with spaces between each field. So now let's keep the first one, characters such as commas or tabs. So we do have a comma or tab between each of the data points we want to pick out, but there's also a space. So let's go ahead and say, let's say we do that and say, oh, wait a sec, let me go back one. So this screen lets you set the delimitation. So is it a tab? No, we have a comma and a space, right? So we have a comma and a space. So maybe I can do an other and say comma space. It won't let me do comma and space. So let's just do comma. So then we have that. Oh, that's a space. If I do comma, we have that comma and space. So now we have boom, boom, boom. Let's see. Or I can do just comma, which looks like that, which is possibly the closest to what we want. So I'm going to say, let's do that. And then column, format, general, text. We'll keep it at the general. Okay. And then finish. So there we have it. Now, because I did it by comma, there's still like a space before it. So I'd have to eliminate the space, which I could do with another formula just to eliminate that first space. But those are just some ideas. So you can look for little tricks to try to combine the data together or separate it out within Excel instead of going in and typing the whole thing. Let's see what QuickBooks is going to want in terms of the formatting. So I'm going to go over here and say, all right, let's first imagine we're going to enter them one at a time, and then we'll imagine we do a bulk enter similar to how we saw the service item and inventory items. So if I was just to add a new customer, which oftentimes I could do on the fly as we go, as we enter forms like invoices and sales receipts, notice we have the title and all this stuff, and then the company name is not even required. The only required field is the customer display name, noting that for some businesses, you're not going to have much information for the customer, right? Because if they buy something on your Shopify store and all you sell is one thing, then obviously you don't have a lot of repeat business. You might want to give them your mailing letter or newsletter or whatnot, but all you really need is their name and the payment information so they can pay you. But in other types of businesses, like a CPA firm, service industries and whatnot, we're going to want a lot more detail about the customer because we not only want to make sure that we make that one transaction good, but be able to have repeat transaction, possibly building a relationship with our customers on a personal level as well, in which case we want more detailed information. So we need the name. We've got the email, the phone number. These are not required fields, but you can imagine these are all fields we could be populating. Name to print on checks, sub-customer, if necessary. That's going to be equivalent to like jobs under the old accounting system. So if you had a job cost system, you might use that. And then we have the address. Street address, we might not need the address depending on the industry that we are dealing with. We're not physically sending even invoices these days, so it's less required oftentimes, but you might need it in some cases. Notes and attachments. So we have other notes that we might want to be applying, noting again, if we're in a service business, we might want to know more information about all of our clients so that we can, talk to them and whatnot on a personal level, possibly even. So add attachments, payments, primary payment method. So how are they going to be paying us as a primary method? We could set this as a default so that when we send them an invoice or something like that, we could set how they're going to pay us, cash or whatever. Terms. So the terms, if we're not using standard terms that we all give to all customers, we could set specific terms on a customer by customer basis, meaning, for example, when we send an invoice, how often are they going to be paying us? Sales from delivery options, if there is a delivery situation. Language, we might change the language in some cases. That's pretty cool that we're able to do that if they want to do that. Credit limit, and then we have the addition. So a limit to how much credit they have, and then additional information. Customer type, if we want to set up different types of customers, and then the tax information, which by default they're going to be applied to sales tax, which is a type of consumption tax based on whether the item is subject to sales tax, but we could override that by saying they are exempt from sales tax if we so choose, or assign a specific sales tax which isn't based on our location, but rather is going to be overridden and based on the customer data. All right, so that's all of that. Closing that out, let's say we want to import multiple customers. Do you want to leave without saving? I do. So let's say we hit the drop down, and let's say we want to import customers. Import customers, boom. And we have the same kind of import thing. So it says first import customers. All your customer information must be in one file. The top row for your file must contain a header. So we have to have a header column. That's cool. Customer name is the only required field. Now they want a CSV file or Excel file this time. So possibly I could use an Excel file. I'm possibly going to want to still use the CSV file just so to make sure it strips all the information and doesn't confuse the system, which is a comma delimited file, often still opened in Excel. So we can also have a Google Sheet, which is pretty cool. But let's see the default that they give us. And I'm going to do the same thing and use their default as the headers that I want to use. So I'm going to try to copy my data into their default information and format it the way they want it, that way. So I'm going to save this. I'm going to say File, Save As, Save File. Let's just say Save, Enable Saving, and then I'm going to save. I'm going to save Browse. Where do I want to put this thing? I'm going to put it here. And it's currently in an Excel 97 2003. That's a way old Excel file. So I'm going to put it into a new Excel workbook just so I can toy with it. I can adjust it, and then I'll save it as a CSV file to strip it of its formatting. QuickBooks Online Customer. This is the Excel. So I'll keep that. All right, let's save it. And so this is the data that they give. So I don't need this. So I'm just going to go through these columns one at a time and just copy over the data. I'm going to make the top bit a bold. I'm going to delete this bit. Right click and delete. All right, so we got the name. So it gives us the first name and last name. All right, so I want both of those in that field. So I'm going to go over here and say, all right, do I have that? I only have these three, so I'll copy this. And then I'll delete the name, and I'll put that here. Boom. Wait a sec. Que paso? Let's copy this, and boom. All right. The company. So company. I'm just gonna call it the same. Anderson Guitars is gonna be the company. So we'll say this is our company name information. So we'll pull that on over. Deleting this. Oh man, did it again. Have to delete it and then copy it. Pasting that there. Customer type, I don't have any. I'm going to delete that. Email addresses, so I'm just going to copy that over. So let's delete what they got first. And then I'll go email addresses. Do I have email addresses? Here we go. Copy that. And then I'll put that in here. Boom. Phone number. I'm going to delete that. Do we have a phone number? We've got the main phone. So I'll put that here. And then you've got the mobile phone and the fax. I don't have any of that, so I'm going to delete it. I don't have a website. I'm going to delete that. And then the address, they want the way I broke it out before. They want the street, city, state, zip. And what do I have over here on the address? I have it all in one cell. So I'm going to do that breakout technique. I'm going to think, okay, I'm going to copy this, put it over here, and say I need to break these things out. So I'm going to go to the data. I'm going to say text to column, delimitate those, and then I'm going to break it out with the comma. The comma, let's do that, and then say finish. So now, but now it's still got a space before it, which is kind of annoying. I think I can, well, no, it doesn't. That one does, this one does. It's got, I think I can go through it with a formula and delete that. I could find the space, but that's okay. I'm just gonna go in here and delete the space in front of it. And then I can also, I need to break out that it's the California versus the zip code. So I'm just gonna type it in. So I'll just say 90210, 90210. We're dealing with Beverly Hills people here. 90210, and then California. And I'll copy that down. So I that might not have been the most efficient way to do that, but you get the idea. You can look for different techniques to kind of break this out. So now I can copy this to just the street address. So they want the street address. Copy. Put it here. They want the city. And they copy this and put it there. They want the state. Copy this and put it there. Delete this stuff. And then the zip. So we will copy this and put it there. We'll keep the country at the United States for my purposes. Now here's the key: opening balances. I need the opening balances. So we're gonna say, all right, what is that? That's gonna be these amounts. And the total of those amounts is 20,500, which ties out to what's on our what we want on the balance sheet. And then the date, we want the date to be, I think this formatting will work over here. So we'll say the date, as of date, is going to be, let's just do it this way, 12/31/24. I think that formatting should work. Let's copy that, paste it down. Boom. Why is it giving me a problem? What's your problem, man? Select date. All right, let's change the formatting to make it a date. We want it to be short date. Oh my goodness. All right, I think that we have it. All right. So then I'll save that. Okay, so now I think everything is in place. Do we have all the balances? I put everything in there. Name, last name, phone. Okay, so let's close this. And now I'm gonna save this as a CSV file. I'm going to save it first as an Excel, then save it as a CSV. We'll strip it of its formatting, which you don't necessarily need to do this time because it said it would accept the Excel file, but I think it's might be a safer thing to do so that it doesn't have any formatting in Excel. So I'm going to save as, browse, and then just change the formatting from an Excel file to a CSV, delimited file. Save it. Okay. So now if I open this thing up, let's close this one. Close this. If I open it up over here, you can see that we have these two files. This is the one that, that's not the right one. Where did it go? This is the one. And you can see that it is if I look at the properties, now it's a CSV file, not an Excel file. So now I'm going to upload this one. And if I open it, it's just the same data, but it's stripped it of its Excel formatting. Closing it up. And we're going to say, all right, let's copy it into this bad doggy. So we're going to say, it would take any of these, but I want to pick up this one. QuickBooks Online, this one, customers. That's the one. All right, and then we'll say next. So now all the headers should line up exactly. Notice if I used my other file, then the headers wouldn't line up basically exactly, and I could still kind of fix it by lining up the headers manually, but I'd rather not have to do that. So if I copy it in and I use their template, it should maximize the headers, although their template is quite old and they should really update it because it still looks like some headers are not exactly the same. But let's go next and say, okay, so then we have, it doesn't like the date formatting. It wants that year's, month, day. Weird. So let's say 2024-month is 12-day 31. And we'll copy that. And all right, is that okay then? QuickBooks, picky. So now we've got the name, company, address, zip, country, beginning balance. I think that's it. So let's go ahead and import it. Import it. It was successful. 3 of 3 customers successfully imported. So there we have it. So now we're back in under the hamburger, sales tab, customers area, closing the hamburger. Now we've got our customers lined up. So if I go into one of these particular customers, if I go into here, then I have all the information I need to still follow up on the customers. Now note, however, that although I see an invoice here, it's not going to give me all the detail of the invoice because I didn't actually populate the invoice in this system. It was populated, we're imagining, in our prior accounting system. So that means that the invoice itself isn't going to be looking correct, but the balance is correct, allowing us to continue with the normal collection process. So in other words, let's look at the form that it created. Edit or view the invoice. So by us entering a beginning balance, it made an invoice. Okay, well, what did it sell? Service items. It just made a generic service item and then said it's going to put the other side to opening. It's just said opening balance. Now, if I send this invoice out to the client as a reminder that they need to pay us, it might confuse them because obviously this is not what they actually purchased. So in order to see what they actually purchased, we'd have to look at the prior accounting system. But when they pay us, it'll be easy going forward, right? Because the invoice can now be connected to the payment in the normal kind of process. So that's the thing. So that when we transfer it over this way, we have to note that the invoices are now in place good and working well in order to do our normal collection process. However, they're not exactly the same exact detail of the invoice. In other words, if a client has a question about what they actually purchased, we'd have to go back to the prior accounting system and populate the invoice, unless you want to go into each of these invoices and properly input the data into it. But my idea would be everything that is prior to the cutoff date, we go to the prior accounting system. And then everything after the cutoff date, we start from here. Invoices are things that are kind of on the line, having a foot in the prior accounting system when we made them and a foot in the current accounting system. So we're just going to basically put them as a generic invoice in here, allowing us to collect easily, hopefully not having any problems on that collection. Once done, the new invoices will be easy going forward because they will be created in the current accounting system. So let me show you what I mean. If I go to here, we're going to say, let's go to the reports now and say that we want to open up our balance sheet and income statement. Right click balance sheet, open, right click the profit and loss and open. Let's go to the balance sheet and close the ham boogie. We entered it as of 12/31/24, 12/31/24, let's say, run it. And we see now we have our accounts receivable in place at $20,500, which ties out to what we have here. Beautiful. Let's go to the profit and loss. Close the ham boogie. Did they put anything in the profit and loss? Because they made an invoice, you would think revenue would have been hit. 01/01/24, 12/31/24, run it. They did. So they put the other side into revenue. That's not where we want it to go, really, because we wanted it to go into equity. But it doesn't matter because we entered it as of the prior period. Therefore, the income will roll into equity. So in other words, if I go into the service item here, it dumped it into service item, and it made 3 invoices for the 3 customers. The 3 invoices given generic data into those invoices just so that we have something to collect on and match up the payment to the invoice when we do collect on it, which we will do in future parts of the problem or courses. So let's close this back out and then go back. The other side is on the balance sheet, of course. In accounts receivable, going into the accounts receivable, we see the detail of the invoices. Accounts receivable goes up with invoices. That's why they chose, of course, the invoice to record the journal entry. So let's go back. Now, notice that the net income is shown here on the balance sheet, which is a little funny, but most of these online softwares do that to try to show us how the income statement ties into the balance sheet. So you can see that we said one way or the other, the income is going to be on the balance sheet. It happened to be on the income statement here and then rolled into the balance sheet here in net income. But once we go into the current period, it'll be into retained earnings. Now note that the fact that it hit the income statement would be a problem if we entered it in the current year. But what we're saying is anything that's prior to the cutoff date, which is December 31st, 2024, doesn't really matter because we're going to use the current accounting system as of the current year. And we want a full year of the current accounting system, January to December. I don't want to have a half year that I have to paste together from the prior accounting system. If we're making the transfer in the middle of the year, in other words, you want to regenerate the data in the new accounting system for the entire year is the general idea. So that means that this would be a problem if I needed this information for 2024, but I don't. And when I change the date to 2025, the year that we're actually going to do the performance, adding new data, making the income statement in, it's going to be 01/01/25, 12/31/25, run it. There's no data in the income statement. That's what we want. On the balance sheet, what happens? When I change this to 2025, it's going to close out the net income to retained earnings, right? So we're going to say, let's move this up a day to 25. It's going to roll in the net income to retained earnings. That's what we want with our plan of entering the beginning balances all the way down, and then the net is going to roll into some kind of equity, in our case retained earnings, which will then adjust at the end of the process, possibly to owner's equity or something for our sole proprietorship in this case. All right, so let's just take a look at the subledger. If I go back to the first tab and I go down to the reports, we go down to who owes you, and let's take a look at the subledger of customer balance let's do a customer balance detail. Open that. This is the subledger report, I would call it. That's a textbook name for it. So of all dates, right? So the idea here is that every account, if I'm on the balance sheet, every account has what I would call a general ledger type of account, which they call, if I drill down on this, a transaction report, breaking out the information in it, I'm bringing it back to 2024 by date of data input and transaction. But that's not sufficient for some types of accounts, such as accounts receivable, where we not only need to know the date that the transaction happened, but who owes us the money, which means we want that same data also broken out in a different structure by customer, which is the classic subledger report. So here's the subledger report, now breaking out each of the customers and telling us how much each of those customers owe. The total then should tie out to, and basically always will tie out in QuickBooks, to the general ledger account, because, and the balance sheet account, because QuickBooks will not allow us to post anything to accounts receivable without adding a customer, allowing QuickBooks to tie out the subledger to the general ledger or balance sheet account. So 20,500, 20,500. Now, of course, what's going to happen later in our practice problem, we're going to get paid by those customers, and now we can nice and neatly, as we normally would, tie out the payments we receive to the invoices we have now created, as we would do in a normal accounting type of system. Now, notice that if we entered a journal entry, it would be a mess, right? Because then we wouldn't be able to tie the journal entry out as easily to the payment. You still kind of can, but it's not what you would expect, right? This is kind of what you would expect. You got an invoice, you got a payment, you tie them out so that it looks proper in the detail of the customer information.